You might have a series of questions about gold and silver and their relevance today. Perhaps you're even wondering if they are still worthy investments or if they, like traditional currencies, are not worth investing in as the world is moving to cryptocurrencies. Now, it would be necessary to consider the place of gold and silver in history today and how they have been influencing the world's economy. Let's get into it. Gold and silver are known for their many unique qualities, such as durability, resistance to varying factors, whether economic or political, and also its universal usage as a currency for as far back as ever. Gold has always been considered the world's most valuable metal, with silver following closely behind. Unlike most investment instruments, which are most affected by the forces of demand and supply, gold has more of a sentimental value, and so it is majorly affected by sentiments of collectors and hoarders. Silver, on the other hand, being an industrial metal, tends to be influenced by economic factors. Investing in gold and silver might involve buying the metals, coins, or buying stocks in the industry in gold companies. This means that other than owning physical metals, investors also have the choice to buy into the market. The beautiful thing about investing in gold and silver is that you can be sure your investments are secure, and you do not have to be so scared of rising and falling prices. At least, this has been so until recent years. There was a time when gold and silver coins were considered legal tender and were used for trading. Later, paper money, which is known as traditional currency, was introduced, and for a while, gold coins could be exchanged for paper currency and vice versa. Countries of the world also backed up their currencies with gold. This was known as the gold standard. At this point, the United States traded more with silver as it was cheaper and easier to get than gold. Some countries, especially the US, also backed up their currency with silver, so trade was done with silver coins and certificates along with gold. It was called the bimetallic gold-silver standard. However, with time, silver coins became scarce as people were hoarding their coins. This brought about the full establishment of the gold standard. So, what exactly is the gold standard? The gold standard can be traced back to as far back as the 18th century, when nations of the world officially accepted gold as the only metal that could be exchanged for paper currency. This was done to gradually shift the focus from trading in gold to paper currency and to reduce the problem associated with transferring gold. While it made trade easier in the global market, it also brought about some degree of instability. Currencies and gold price could fall or rise subject to hoarding or discovery of new deposits. The collapse of the gold standard started with the First World War. This was because nations needed cash, paper currency, to fund their militaries. The United States of America ended up with the largest reserve of gold in the world after the Second World War. In return for other countries' agreement to peg their currencies to the US dollars, the US would redeem its dollars for gold. This later crashed too, when the United States could no longer sustain it due to inflation in the country's economy. It was in a bid to improve the nation's economy that the US got into an agreement with Saudi Arabia for the sale of oil in exchange for dollars, which has come to be known as petrodollars. What is petrodollars? Petrodollars are simply the exchange of US dollars in exchange for oil. With petrodollars, the only acceptable currency for the sales of oil is dollars. This means that oil-exporting nations of the world have to be paid in dollars for their oil. This, in effect, brought along a shift from the exchange rates, which were pegged to the dollar and gold-backed currencies, to non-backed and at floating rates. In reality, this means that the petrodollar is backed by dollars, not by gold. The power of the petrodollar lies in the value of the US dollar. This helped in establishing the US dollars as the global currency and the world's reserve currency. Now, what happens if the dollar falls? The dollar could collapse due to several reasons, including hyperinflation, and if other countries of the world switch to other currencies. While this seems impossible, it might happen. The dollar might keep rising till it reaches a point where it will crash. Almost all nations of the world, especially the oil-exporting nations, are now dependent on the value of the dollar. If the value of the dollar falls, it will affect their economy. The prices of their products and services, including other exports, will also fall. Due to the world's dependence on the US dollar, there have been fears as to what would happen if the dollar was to fall. With the world shifting its focus from oil to technology as well as renewable energy, more than ever, it seems these fears might be founded. The gold standard would mean that a nation would be restricted to its worth in gold, even with its paper currency. However, this has not been so for quite several years now. Paper currency and gold now have quite distinct values, and one no longer influences the other. It has been said that countries print paper currency based on the state of their economy trying to regulate inflation. Therefore, in this case, what if the United States is unable to redeem if all its dollars are called in? For a country like China, which holds most of the United States' debt, the fall of the dollar would mean that they would not be able to call their debts in. If the dollar were to fall, there would be great global economic chaos, and it might take years to recover from it. The prices of stocks and virtually all investments in traditional currencies would fall too. This is because, right now, every nation's economic system is linked to another or even others. Funds held in the United States dollar will have no value, which will wipe out savings and crash the assets of companies and people all over the world. For the masses, they would certainly panic. People would rush to the bank to exchange their US dollars for other currencies. There will be huge demands for withdrawals because people will be scared that if they wait for longer, they might not be able to get their money. This will happen all over the world. Banks will find it difficult to pay their customers and to continue business, as they cannot get the money, so they will start failing. Bank accounts will have to be frozen, and the economy of many countries will collapse. After the collapse, nations would most likely have to fall back to other currencies, like the euro and precious metals, especially gold and silver. New currencies will be explored, which might involve for a while going back to trading with gold and silver or digital currencies, as there have been speculations about the fall of the euro, especially to recent issues of the European Union. The next strong currency might be the Chinese yuan. Nations like Mexico have already put some measures in place, trying to preempt the collapse or fall of the dollar. Silver coins are being made to serve as currencies. The interesting thing about the use of gold and/or silver as currency is that it is accepted everywhere. Gold is always gold. The value does not depreciate or increase because of the locality. Therefore, anyone can spin his gold or silver coins anywhere. There have been beliefs that some other nations would soon follow the steps of Mexico. Analysts have described the gold and silver stock market as being very volatile. There's no way the market can be adequately predicted. However, stockbrokers would still advise investors to buy up gold and silver, as despite their volatility, gold and silver would still be valuable metals. Despite the collapse of the gold standard, people still continue to hoard gold, and even central banks of countries buy and reserve gold. The United States itself keeps increasing its gold reserve, and it currently has the largest reserve in the world. The United States gold eagle coins are even accepted as legal tender in the country. There have also been reports of gold investors buying up tons of these gold coins every year. So, will gold always be mined? Or what happens if gold can't be mined again? In recent years, miners have encountered more difficulty trying to mine gold. This is because the easy gold, the one closest to the Earth's surface, has already been mined. Except for new large discoveries, miners have to dig deeper into the soil for gold now. This results in higher mining expenses, hazards to both the miners and the environment, driving up the cost of gold. The fear of running out of new gold might be another reason why people are hoarding, apart from economic and political factors. Though silver is not as revered as gold and costs considerably less than gold, it is still one of the most precious metals, and it still has a lot of benefits. Decades after the silver standard collapsed, there are demands for government-issued silver coins, and demands would likely increase for this less costly metal, as investors see it as a very good alternative. It must be noted, though, that the cost of silver is more subject to fluctuations than gold, and demand for it will always be next to the demand for gold. Should you invest in gold and silver? Yes, you should. Precious metals can be a good portfolio diversifier and hedge against inflation, especially gold and silver, which are very certain and solid investments. They have been existing and valuable for several years. They are the currencies that men have returned to when there were problems for over 1,000 years now. Gold and silver are secure. Paper currencies have only been for some years, and a time might come when they can no longer be sustained or backed by the country issuing them. History has shown us that various paper currencies have crashed due to hyperinflation. The best thing one can do to prevent this is invest in other portfolios, and gold and silver certainly seem like the best choice right now. Gold still retains its value, while traditional currencies are subject to the whim and caprice of the economy. It is worthy of note that one of the reasons why gold and silver have been able to retain their value, despite being pushed to the back several times by various economic systems, is because it is recognized and accepted all over the world as being valuable. Generally, its value is not dependent on the economy of a nation. While gold is more of a fashion metal as it is used more in jewelry and beautification, silver is considered an industrial metal. Its value is thereby sometimes hinged on its application. That's it, it's a wrap. What do you think? Have contrary opinions? Share in the comments, and in case you have not subscribed to this channel, please do that and turn on your notifications too to avoid missing out on other enlightening videos. Don't forget to like and share. See you next time!